What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. Please trade at your own risk. Now, I just want to start off by saying I appreciate everybody who has subscribed to the channel. It makes me really happy. I also want to say I appreciate all the criticism that I've gotten into the comments. Thank you for teaching me something I didn't know or correcting me on something that I was teaching myself incorrectly. So I just want to start off and say thank you guys for letting me know what is supposed to be different so that way I can correct myself going forward. Because again, I am not an educator. My educator is ICT. So I just want to start off there. Now, ICT is Silver Bullet. Um, people commented on one of my previous videos and um, let me know this is like somewhat ICT Silver Bullet and that I was applying it kind of wrong and whatnot. And so I was researching it a little bit more, and I've been kind of coming to the understanding that this is how it's applied. Now, again, correct me if I'm wrong, please in the comments below. I appreciate it that we're all learning together. It's really awesome. But right here, ICT Silver Bullet, this is specific to ES. Now, I've been doing it on NASDAQ, and ICT says 5 handle stop, and you'll lose your ass off in NASDAQ, and that's true. Somebody corrected me and told me it's specific to ES, and this one makes sense. It makes a lot of sense. So if you don't have ES on your charts, you can simply go to TradingView. You could go up here, you could symbol search, and you could symbol search here. You could press the plus symbol here. You could look for it here. You could press the plus over here. It'll all pop up. But what you want to look for, just type in ES under the futures. And it's the first one that pops up. It'll say CME mini. Okay, you're going to press the plus and you're going to add it to your chart, right? So once you have it added to your chart, this is what it's going to look like. Okay, so the Silver Bullet model is a time specific setup that forms between 10 and 11 New York times specifically, okay? And if you don't have New York time on your charts, New York is this one down here. You can change the time right down here when you want to set it to New York, okay? So it forms every single day. Watch for it on 1 minute, 30 seconds, 15-second time frames. It will form on one of these 3 time frames. ICT says to anticipate this formation and price every single trading day. It's a move that will always be there. They will never be able to hide it from you. They're never going to be able to change it. Nothing's going to change it. It's always going to be there. There's never a reason, any reason for you to doubt that it won't exist, okay? So there are macros that exist. One is from 9:50 to 10:10. In that 20-minute period, generally, you're going to see a price run that begins in that 20-minute span. So what you're looking for is a run that begins between 9:50 and 10:10. The Silver Bullet is specific to the 10 to 11 hour. And ICT teaches partials. He teaches that you have to pay yourself. So the draw on liquidity may not always get ran out. This is just kind of a disclaimer. It may not always get ran out. It is just a way for you to frame your expectations on where price should gravitate to. Because I know somebody was commenting like, it doesn't run out liquidity every single day. And yeah, the ICT does mention that it won't always do that, but that's why he teaches partials. And you're targeting a 5 handle profit, 5 handle stop loss, 5 handle take profit is what he says. Now, step one, we're going to do it together. We're going to go with time, and on ES, we're just going to scrunch it up. So we have no idea what's going to be happening in the past. We're on the 1 minute time frame, and y'all are going to learn how to trade the 1 minute right here, right now. It's going to be pretty cool. If you don't already know how to trade the 1 minute, study, check it out, watch. This is going to be cool. I'm just going to take the replay tool, and we're just going to go right here. Real random, right? We have no idea what is going on at this moment in time. You can't tell me that you do. I can't tell you that I do, honestly. So right here, I went to an 11 o'clock. So this is 10 to 11. Oh, great. You know what? We got to go to the next day because that already played out. So let's go to the next day. We're going to play it out. Might take a moment. So I'm going to go to the 5 minute real quick just to play it out so we could get to 10 to 11 the next day. Okay, cool. So we're arriving to it. 10 is right here and 11 is right here. Now, again, that little macro begins at 950 from 950 to 1010. So we'll just annotate that as well, just to kind of have it in mind. But let's continue to play it out up to that point. So we know where we're getting to. So the step one for this is time. So on ES, you want to delineate your 10 and 11 times with a vertical line. And that's what we did right here. Boom. Wait, that's 950. 950 to 1010, this is where the macro begins, but right here to right here. Now, this is not necessary. I mean, you can do it if you want to. I'm just doing it for the video sake so we can demonstrate this, right? So step two is liquidity. On 1 minute, 30 seconds, and 15 seconds, this setup will form in one of these three time frames. Identify and annotate swing lows, highs, relative swing lows, highs to the left of our 10 o'clock vertical line. Now I have the dashes in here because it could be either one. So again, you don't need a daily bias with this, right? So let's just get to the 950. And then the liquidity run should begin around this area. So there's liquidity here because it just formed a swing just now. Took out liquidity here, formed a swing high. There's liquidity down here, right? So whichever one it takes out, that's what we're looking for within this macro right now. Okay, there's that run of liquidity right there. You notice here too, there was it created kind of relative swing highs right here. Created relative swing highs right here in this area. You can see that this wick respected it as well. So this wick got ran out, created like, you know, people were looking at this like resistance. And you can see obviously it got ran out. And there was also a little bit of a liquidity run right here as well. You can see that right there. But step three, displacement. Wait for the obvious run on liquidity. Is it going for buy side or sell side? Once that obvious run on liquidity happens, wait and watch for a displacement toward opposing liquidity. So this is run of liquidity, displacement towards opposing liquidity. Boom. Now, fair value gap. After the displacement within the fair value with, oh my goodness, after that, the displacement. Within that displacement, there will be a fair value gap. Price will likely retrace and tap into it, then likely displace away. Okay, so let's just wait and see. It's just consolidating right now. Okay, so here's displacement. There was liquidity that was created right here. It got ran out, displacement, and here's a fair value gap, okay? And what is it displacing toward currently? Opposing liquidity, which is right here, right? It hasn't been ran out just yet. So now that we have this fair value gap, price will likely tap it, take off, okay? Tapped into it, takes off. Now, once it takes off, second displacement. After price taps into the fair value gap and displaces away from the fair value gap toward opposing liquidity, creating a new fair value gap, is where the second fair value gap comes into play. After the second displacement, we will identify a new fair value gap where we will annotate it and look to take entry here. So if you notice, here's the displacing away, targeting opposing liquidity. Here's another fair value gap. And this is where if I'm wrong, please correct me on this. If I was supposed to take entry down here or what. Again, I'm not an educator, I'm a student, and I would love to learn this. Okay, so please let me know what's missing. If I'm approaching this correctly, let's get this down together, all of us. Okay, so right here, you would set a limit order, and you're going to set it with a 5 handle stop, and you're targeting 5 handles where we will take off partials. Okay, so this is limit order, set your limit order by, always set a 5 handle stop loss, and always target 5 handles. Once hit, claim partials. ICT teaches partials, okay? Let's see. Okay, we're in there. We're in there. And it hit. Boom. And it hit. So we take off. Let me know if it's supposed to hit within this hour too, or if it can run into this 11. Because from my understanding, the lunch hour is at 12. So from 11 to 12 is still okay. So I'm assuming this is okay. Okay. Now, right here, we would take off partials. So now we would still be winners because at this point, now we got to move our stop loss. We're going to cut it in half. So we cut our risk. So now regardless, if price wants to come all the way back down here and stop us out, we're still going to be winners. But now we can target, since it already took out opposing liquidity, boom, it's creating new liquidity, but we can target maybe a 1 to 2 for now until it maybe creates a high that we can target that opposing liquidity and we can move our take profits down. Let's just see what happens. Okay, 1 to 2 hit. Now, at this point, personally, I'm taking profits. This is a beautiful scalp. I'm out this position. If you want, you could take partials long term. I don't know if it'll work out, but it's all up to you. Back test what works for you. But right here, I'm taking my full position and I'm out. I'm done. Now, let's see if you wanted to target, a 1 to 3R, see what would happen. And at this point, I'm just going to press play. It hit a 1 to 3R, which is sick. ICT setup is playing out really nice. Let's target a 1 to 4R. Let's see what happens. So it comes back down. At this point, it went through the whole lunch hour. You could have taken your profits after lunch or something. But at this point, it's coming back down. I'm out this position. I would have been out. I hope y'all would have been out. This was a beautiful scalp for a 1 to 3R. That's game all day. But with that being said, I just kind of wanted to demonstrate this for my own viewing. And if y'all click onto this video and y'all learn something new, that's awesome. If y'all correct me, give me criticism, please. I appreciate it. I really do. I learn from it and I apply it. And I just want us all to learn together, which would be awesome. Again, I'm not an educator myself. It's not financial or trading advice, but let's all get successful. Let's all pass these funding challenges. Let's all do it. Let's get it together. You know what I mean? But until next time, I appreciate y'all for giving all the support. Make sure you drop a like, comment, subscribe, click that bell. And until next time, hot shot out.